founder and managing director of OMFIF, which studies the behaviour of official monetary institutions, i.e. central banks. One change to the advertised programme is that David was, this may have been spoken about before, but was planned to speak on his financial regulation and industry in its own right. And David has an interesting topic, but he's requested to change his talk to the state of play of ECB monetary policy, where are we now and where are we going? So David, the floor is yours.
Thank you. Yes, one of the reasons why I thought I might change the examination question is I thought you might have solved that question already by the time I got here. And I apologise for not being here early. But I did think I would possibly take the liberty of indulging you and myself in a little political economy, which might perhaps help to solve some of the riddles that have been thrown up during the day. But I didn't want to disappoint Tim entirely, so I do have answers to your questions. The first answer is certainly yes, and the second one is it is neither, because I think the financial regulator should be a kind of Jeeves-like figure out of P.G. Woodhouse. You don't actually know who is master and who is servant most of the time. And I would like to introduce the master-servant analogy into this question of who is driving ECB monetary policy. And some of these issues, I think, will be those that are quite familiar to you, because you've discussed them also during the day. But they're also guiders to the future. And banks clearly do come into it, because a lot of the policy now is very much geared to shoring up banks in the southern periphery, particularly in Germany. And so these are my overall points, that the asset purchase programme, which is continuing still in the European monetary area, is very much geared now to political rather than downright economic factors. The health of the Italian banks. I'll come on a little bit later to the extraordinary political wrangling that's going on between Italy and Germany on the banks. The Deutsche Bank is actually rather exposed, and that is something which the Italian politicians and those at the Bank of Italia, it's nice to see that Mr. Visco has been renominated now just in the last few weeks, very much at the last moment. He's a real politician, and he's really driving the knife in regarding the Deutsche Bank. It's quite clear that the deflationary danger has passed, which was the acute reason and the reason given for the introduction of the asset purchase programme in Europe, which started just over 2 years ago. Draghi clearly has learned the lessons of the premature monetary tightening in 2011, and maybe he's read some of Tim's papers as well, because clearly the health of the economy in the European monetary area has very much depended on the state of play of the balance sheet of the ECB, and so there was a premature monetary tightening on two occasions, one in 2008 and one in 2011, 2012. I think it's extremely interesting to look at the politics of Draghi's succession. We've had the Yellen succession, which has ended in a bit of a damp squib, really, no great fireworks either way. I think there will be fireworks, actually, over the question of Mr. Weidmann, if he's the Bundesbank president who actually wants the job. And I think it would be a terrible poison chalice for the Germans to take over at that particular juncture. And so very much leaping into the future, I do think there's a danger that there will be a recession in the United States, and that the Americans will restart QE just at the time when the European policies haven't started to normalise at all. But I'll get onto that a little bit later. But my overall feeling, as I just pour a glass of water, my overall feeling is that Draghi has been absolutely masterly in papering over the cracks in the monetary system. But as soon as you paper over a crack somewhere in the edifice, it appears somewhere else. And I think the cracks that have appeared now in the political consensus, particularly in Germany, are going to reappear potentially just at the time when Draghi is nicely out of the way, and either on the way to his retirement home or to some sort of political job somewhere in Europe. And he'll leave his successor to hold the baby. So I foresee some pretty difficult times ahead for the monetary union projects. This tells you what you know already. This is a slightly different chart to bills, because this is simply taking 2007 as 100, whereas bills shows the masterpiece of coordination that we obviously did there, Bill. Yours was based on GDP, so that tells the same story but in a slightly different way. It is interesting to see that the pace of asset purchases of the Europeans has matched in the trajectory, has been very, very similar to that in Japan. That's the big thick red line, and you can see the dip that took place between 2012 and 2014, which was basically when the banks were repaying some of the former help that they got under the long-term refinancing operations. This was something that the ECB only had limited power to control, but it's quite clear that many banks in the periphery couldn't fund their assets from the market at that time and had to repay some of their central banking help, and that was one of the reasons for the hardest state in the European economy. Just around the time when Draghi was taking over, he took over, and that's the vertical line, he took over in November 2011. And of course, the trajectories of the Fed and the Bank of England, the Bank of England is the top line, where the Bank of England started its purchases relatively early, at a very steep trajectory. And that of the Fed, which started a bit later, as a slightly more modest trajectory. They do tell a story that it is wise to start these things big and early. The Europeans, of course, hesitated, as well they might, because one of the principal countries is Germany, which believes that purchasing assets for the central bank is akin to summoning up the spirits of the Weimar Republic. So it wasn't really all that surprising that Mr. Weimar held off. He was really like the Canute holding the dike, because if you remember, there was a big, big effort to have not to have negative interest rates. Well, they gave into that in about 2012, and then the next idea was to stave off the quantitative easing. I remember talking to Weidmann around about 2012, late in 2012, I think, and I said, I reckon you've done enough. No, actually it must have been 2013. You've done enough to stave off quantitative easing for another year, and that was it. Really, it was actually designed to slow down the implementation of monetary easing through quantitative easing. That could have been a grave mistake, because had they done it earlier, they might have been able to escape the poison chalice that I think Mr. Draghi himself may be, Mr. Weidmann himself may be about to quaff from. Clearly you know that the euro area has returned to strength, and people like Tim who've been following these things, I think, predicted this, because it's quite clear that quantitative easing introduced in early 2015 has added to the money supply in a way that has helped the economy in many ways. The trouble is, of course, it has done it in a differential way. The monetary union not being a sovereign state area, it's affected different countries at different rates and at different times. And Germany has done particularly well, you might think, because we do have now very low unemployment, almost full unemployment. The latest government report of the parliamentary advisors that came out this morning talks about overheating. And of course, even though inflation is still relatively low, Merkel has always been absolutely in favour of what Draghi has been doing, because he's really got her out of a tremendous hole. And so she did give him some support after the Do What It Takes speech, which she made in 2012. And she got re-elected in September. But the point is that the AfD, the anti-Euro party, which has been like barbarians at the gate for 2 or 3 years, has now got into Parliament. As a result of which, the parliamentary debate on all this issue is going to be massively more robust than it ever has before. And we haven't seen anything yet, because Parliament was just reconstituted a few weeks ago, and the government, it'll take several weeks, if not months, still to constitute the government. So we won't see the real fireworks until January or February. But you have seen the initial effect of papering over the cracks has been the pace of recovery increasing. And this is the size of the balance sheet split up into its different components. I'm not quite sure why there's the blue line there. The LTROs are the less effective way that the central bank was irrigating the balance sheet of the banks. The TLTROs, which were introduced under Draghi, have been much longer term and targeted towards those countries which actually really need it. And the APP is the asset purchase program, which started, as I say, in January 2015 and is going to continue all the way through to next year. And then, according to the Draghi statements, they are still ruling out any tightening of interest rates until 2019, effectively, which I think is a major mistake because it really does expose some of the banks, particularly in France actually, to quite severe attrition. The interesting thing is that the banks in Germany are certainly being put in under some squeeze by negative interest rates, but the Bundesbank quite likes that. A little bit of pain for the banking system, it feels, leads to consolidation in the banking system. Germany is overbanked. So underneath all the rhetoric about being displeased about negative interest rates, there is some feeling in the Bundesbank it's actually good for the health of the banking system to have fewer banks, because they clearly are having to change their business model or merge among some of these savings banks. That's not so possible in France because the banking system has been much more consolidated than in Germany. But there is a compact now between France and Germany, between the people on the Monetary Council at the ECB, that whatever they're going to do, they're going to do it together. So the animosity of the Germans towards quantitative easing is sort of cancelled out by its relative equanimity about negative interest rates, whereas in France it's the other way around. They really hate negative interest rates, they rather like QE. So that means that this policy will only change when the French and German chiefs of the central banks decide it will change, and it's not going to change yet. They're going to go on and Mr. Draghi will have his field day. This is just some detail about all the different bits that they've been buying. It is a rather a rag bag of a program, but it's heavily dominated, of course, by the assets of the public sector. And the interesting thing to look at here is the this is basically the breakdown. So I won't go into all the details of that. It's almost too many figures there, but it does mean that the balance sheet of the ECB has doubled now compared with 2015, and that was very much what Draghi wanted. And you have to say this is predictability, because he did say we need to increase the size of the balance sheet by €2 trillion, and that is indeed what has happened. These are just some of the figures that you know about. Clearly there has been a recovery, but a lot of the wage growth, and certainly the productivity growth, and the consumption growth to a certain extent have been well behind that of previous recoveries. So it's not surprising that inflation is still well below the target that the ECB set in 2003 of close to but below 2%.
Is that EU? Or there's all EU numbers?
Yes, these are the euro area numbers, rather than this is the euro area. Yeah, it is interesting, I think, that there hasn't been a proper debate in Germany or anywhere else about whether the target which the ECB redefined in 2003 is an appropriate one. Had they stuck to the old one, which they started out with in 1998, which was that inflation should be simply no higher than 2%, then they would be meeting their targets perfectly. And they are really hoist with their own petard of trying to keep to the new target, which was set by Oscar Issing, surprisingly enough, now the biggest opponent of this policy, of close to but below 2%. And of course there's a big issue about over what period does that have to be reached, and also whether you can really fine-tune the inflation rate by a few fractions of a percentage point by more asset purchases. For reasons I will explain, it's not entirely in the gift of the ECB. This very complicated set of figures simply shows how the capital key hasn't really worked. Germany has over-purchased bonds at the beginning of the programme because there weren't the bonds from other countries available. And so there's been over-purchase by the Bundesbank, more than its capital key in the ECB. And in the last few months, Germany and the Netherlands have become under-purchasers, because otherwise they would breach this self-set limit of not being able to buy more than 1/3 of an individual issue of a bond. And that itself is because the individual central banks do not want to become too large creditors of the states, because they fear that in a debt restructuring they would be forced, they couldn't be a holdout any longer, they would be forced actually to reschedule debts, which would of course go against the edict of monetary financing. So it's an extremely convoluted, legal, technical, almost criminalistic story that you have to go through to decide about how ECB policy is actually working. And that's why this analogy of master and servant, nobody really knows who's running the show, because as I will explain in a few moments, it may well be the courts and it may well be the politicians who decide in the end. This simply shows, this was the state of play before they did decide to extend the asset purchases, which we all knew they would, by 30 billion a month through to September 2018. This shows how one of the reasons why Germany has slowed down its bond purchases and be under the because otherwise it might reach the 33% issue limit. Of course, they could change that issue limit, but that, I think, would lead to another legal, political, technical squabble, which they don't actually want. German bond scarcity has been driven by fiscal restraint. They haven't been issuing enough bonds, and of course, something that might change with the new coalition is that it's going to be a very expensive coalition. They're certainly moving away from the balanced budget of Mr. Schäuble, and there will be something akin to an attempt at an income tax reform, but there will also be quite a lot of additional spending, because the combination of the Greens, the Free Democrat Liberal Party and the CDU-CSU have all got sums of money that they want to spend, which may add up to about another 100 billion of fiscal expansion. So those who are pleading for more German fiscal expansion are going to be quite pleased. Now, this is an area which I know the Institute has been looking at a great deal, the QE contributing to capital flight. The hump, which I know was shown in some previous charts, the target to hump in, famously, August 2012. That went down, and that was a time when it did seem that the euro area strains were starting to be suppressed. And in fact, Draghi started talking about QE, he started to talk about the target 2 imbalances when they were falling. They've now been creeping up again, and they're 200 billion above the level of August 2012. That's not been because of acute strain, as was the case in the summer of 2012. It's been simply because the people holding Italian bonds have been selling them to the Banca d'Italia, or to people in Spain selling it to the Banca de España, and then shipping the proceeds into the safer waters of Northern Europe, which is the reason why the banks in Northern Europe have now become very large creditors of the banks through the banking system and through the central banks in Southern Europe. And that target 2 balance will very likely, as a very mathematical result of quantitative easing, will exceed the princely sum of 1,000 billion euros, probably by January or March next year, just at the time when the AFD is really getting into its stride in the Parliament. So a news item which might have been on page 34 of the Frankfurter Allgemeine will suddenly be elevated to page 1 of the Bild Zeitung in very large letters, I predict, once the target 2 balances reach that figure of 1,000 billion. So we'll see what happens over that. As I say, I think the parliamentary debate is going to be much more lively. The longer QE continues, the larger these balances are likely to be. And QE will continue, albeit at a reduced rate, for the whole of 2018. It's very interesting, the reinvestment programme. There is a reinvestment programme, like in the Fed, but nobody knows very much about it. And of course, Germany might actually simply protest it's not going to reinvest the securities. It's again one of the parts of the story that a Dr. Watson would have been very able to help here, asking the right questions, because it could be that there could be a political legal constraint on the Bundesbank reinvesting the proceeds. It has got a lot of short-dated maturities, and they run off earlier than in other countries. So this is why 100 billion of German bonds mature by 2019. And if the Bundesbank doesn't reinvest all that, then of course that does mean that the balance sheet of the ECB does start to normalise. This is what I think is the most interesting question. We put our advisory board to the test, and 61% of those forecast a few months ago that it would be Weidmann, 30% Villeroy de Gallo, who is the very urban Frenchman, who has taken a great deal of trouble to go to Frankfurt and speak in his very scholarly German to the assembled German banks. And he comes from the border region, Villeroy and Bosch, famous luxury bathroom equipment. He is a denizen of that area. And so he's trying to say he's not actually a Frenchman, after all, he's pretty German. But I do predict an enormous fact here, because the Germans don't really want the job until somebody says they can't have the job. And then they jolly well do want the job. And they are saying it's going to be akin to racism if there's an attempt to stop a German getting the job at the head of the ECB. And the people surrounding Weidmann say he'd be the perfect person to do the job, having been assiduously against the quantitative easing, against negative interest rates, against always everything that Mrs. Draghi has put forward. But having been outvoted on every single occasion, probably 9 or 10 really important times over the last 7 years, they say he's just the man once the horse has been courted up to the top of the hill to march it down again. I disagree. I think that having been outvoted on so many occasions, he's going to be outvoted all the time in the future as well as in the past, because there'll be lots of things to vote about. It's not going to be plain sailing at all, particularly if the Americans do start quantitative easing for whatever reason, just at the time when the Germans are thinking about lowering the balance sheet of the ECB. So that's the end of the presentation. I didn't think it would go quite as much out as that. My point is that there are poison chalices heading over the hills towards the Bundesbank. Thank you.